We're taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist at Standard Bank. Thanks so much, Shireen, for joining us this morning. Well, we had the Rand extending losses against the dollar yesterday. It traded about 1.3% weaker on the day and was the second worst performer of 20 global emerging market currencies tracked by Reuters. This morning, though, some strength filtering through. We've got the local unit back below the 8 mark at this stage of the game. What are you making of the kind of movement we're seeing and the factors at play here?
Well, yesterday we did see the Rand weaken to about the 8 Rand level on the back of the fact that we had weaker than expected GDP data coming out of China and the implications for the global growth prospects. We did, however, see the Rand recoup some of those losses in the afternoon on the back of the stronger than expected corporate earnings data. Yesterday's price action was just really an indication of how the indecision ranks in the market at the moment. We therefore would favour into selling, well, we would therefore rather favour into selling into Rand strength on the back of this indecision if it continues to persist. However, if we do see today's CPI data come in softer than expected, it ironically would obviously favour the Rand going forward. On the back of the fact that it could possibly indicate that inflation conditions are relatively contained, and it could obviously lead to the Reserve Bank cutting interest rates in the coming months. Also favouring the Rand and going forward is if we see another wave of portfolio flows both into the JSE and the bond market. We do believe that if the Rand bulls reach 794 to the downside sustainably, we could possibly see a move towards 774. However, if it's not the case and we do see weaker than expected CPI data coming out later this morning, we could see the Rand move back towards the 810 level.
Of course, it's interesting that you say, if we do see possibility of a cutting of rates coming through, that we'll see Rand strength filter through, because it means that we've got the growth story and that, growth ability outweighing the kind of carry trade potential that the Rand could have down the line.
Indeed, we are cognizant of the fact that the rate cut possibility is starting to increase, and that is really going to put some pressure on the Reserve Bank should those numbers obviously continue deteriorating. We also have the retail sales data coming out later today, and if they do come in softer than expected, that the rate cut possibility could obviously rise. The FRA markets are pricing in a rate cut sometime this year, but we do believe, Standard Bank believes that the rate cut is not likely to materialize, and that we do expect the SARB to keep interest rates unchanged at 5.5% for the remainder of this year, with a rate cut expected, a rate hike expected in the third quarter of next year.
Well, of course, those are some of the domestic factors at play. Internationally, we've had a report on deals to bolster the eurozone's rescue fund coming through, where France and Germany have reportedly reached a deal to enlarge that fund moving forward to 2 trillion euros. Is that new hope, or do we see it as just rumour mills turning once again?
Well, it does seem as if it's some new hope, but as you mentioned, those rumour mills have started rolling quite considerably. We have seen it come through in the past couple of weeks, and we really need to wait and see if there's a decisive solution coming through and whether that is actually employed over the next couple of weeks. And going into the October 23rd EU summit, there could be some more decisions coming out of there and more rumours, but hopefully by the meeting at the beginning of November, we could see more decisive action being taken.